Isaac Newton invented calculus and defined the laws of gravity. He was arguably one of the smartest humans to ever walk the earth. He also lost the modern equivalent of millions of dollars in the stock market bubble of his time and died bitter about it. Think about that. If Sir Isaac Newton couldn't math his way to beating the market, what chance do the rest of us have? Actually, a pretty good one. Welcome back to the Trading Stack. Today we tackle the biggest insecurity that stops people from trading or causes them to blow up their accounts once they start. The belief that you just aren't smart enough. We have the movie image of traders. We picture people doing complex trigonometry in their heads, analyzing 20 screens of data simultaneously, spotting patterns no one else can see. It feels like 4D chess played by geniuses in expensive suits. But the truth is way weirder than that. In trading, being too smart can actually be a massive handicap. Today I want to show you why your IQ means almost nothing to the market, and what actually does matter. Let's be honest, in almost every other area of life, being smarter is better. If you're a smarter engineer, you build better bridges. If you're a smarter doctor, you diagnose patients faster. So, it's natural to assume trading works the same way. You assume that if you just learn more indicators, read more financial reports, or find that in secret formula, you'll win. But the market isn't an engineering problem. It doesn't care about your logic. Here is the first trap that highly intelligent people fall into. They are used to being right. Throughout their lives, if they analyze the data and form a conclusion, they are usually correct. They get the A on the test. They solve the bug in the code. But the market is messy. It's irrational. So, what happens when a really smart person places a trade based on perfect logic and the market moves against them anyway? Their brain breaks. Their ego steps in. Instead of taking a small loss and moving on, they double down. They hold on to losing trades because their ego literally cannot handle the concept of being wrong. The market loves to take money from geniuses who think they know everything. But there is a second, more subtle trap. Let's call it the curse of complexity. Smart people love to solve puzzles. If you give a smart person a simple problem, they will often subconsciously make it more complex because they don't trust the simple answer. In trading, this looks like analysis paralysis. The average trader might look at a chart and say, "Price is going up, I'll buy." The genius trader looks at the same chart but then layers on a Bollinger Band, an RSI, a Fibonacci retracement, volume profile, and macroeconomic news from Japan. They create a system so complex that it creates friction. They are looking for the perfect entry. They want the data to align so perfectly that the risk of losing is zero. But here is the catch. The more variables you add, the more noise you create. While the smart trader is busy calculating the exact slope of the moving average relative to the moon's gravitational pull, the simple trader has already entered the trade, taken their profit, and gone to lunch. Complexity feels safe. It feels like control. But in trading, complexity is often just a hiding place for fear. This leads us to the fundamental disconnect, the difference between a deterministic world and a probabilistic world. Most smart people, engineers, developers, doctors, work in deterministic systems. If you write the code correctly, the program runs. If you mix these chemicals, you get this reaction: cause and effect. So they approach the market looking for that same causality. If the RSI is below 30, the price must go up. But the market is probabilistic. It is not a machine. It is a collection of millions of human emotions fighting each other. You can do everything right, your analysis can be perfect, your math can be flawless, and you can still lose money. For a logical brain, that is infuriating. It feels unfair. And this is where the smart trader fails. They try to fix the system, they tweak the algorithm, they change the parameters, they hunt for the bug in the code. But there is no bug. It's just variance. Now, I can hear some of you screaming at your screen right now. But wait, what about the quants? What about those math wizards on Wall Street who use complex algorithms and make billions? You are absolutely right. Those people exist. But focusing on them is dangerous because of something called survivorship bias. It's like looking at a lottery winner and deciding that buying lottery tickets is a solid financial strategy. You see the one guy on the magazine cover who used his massive IQ to beat the market. What you don't see is the graveyard behind him. For every one genius who used complex math to make a fortune, there are thousands of other equally smart people who tried the exact same thing, got wiped out, and quietly went back to their day jobs. We just never hear their stories because nobody writes books about the guy who lost everything. So here is the reality check. You can have a brilliant, complex strategy, but if you lack discipline, you will eventually be part of that invisible graveyard. On the other hand, you can have a boring, simple, average strategy, nothing fancy at all. But if you execute it with perfect discipline, you will outperform the undisciplined genius every single day of the week. There is one final handicap regarding high intelligence that we rarely talk about: apophenia. This is the human tendency to perceive meaningful patterns within random data. Evolutionarily, this is a superpower. It's what helped our ancestors spot a predator in the bushes. Smart people are exceptionally good at pattern recognition. That's usually why they are smart. But put that same brain in front of a random price chart and it starts hallucinating. Where a disciplined trader sees noise or choppy price action, the genius sees a complex, inverted harmonic bat pattern. They convince themselves they have found order in the chaos. They see patterns that aren't there because their brain is uncomfortable with the idea of randomness. They overtrade because they think every wiggle in the chart is a signal meant for them to decode. Sometimes, a candle is just a candle. It doesn't mean anything. And being smart enough to realize that you don't know what's happening is the ultimate edge. So if intelligence isn't the key, and pattern recognition can actually hurt you, what is the key? Let's try an analogy. Trading isn't like chess. In chess, there's no hidden information and pure strategy wins. Trading is a lot more like dieting. Hear me out on that. Intellectually, losing weight is incredibly simple. Eat healthy food and move your body more. You don't need a PhD in nutritional science to understand the concept. A 10-year-old understands it. The knowledge isn't the hard part. The hard part is 9 p.m. on a Tuesday when you had a stressful day at work, you're tired, and there's leftover pizza in the fridge. At that moment, your high IQ doesn't matter at all. Your knowledge of macronutrients doesn't matter. The only thing that matters is, do you have the discipline to not eat the pizza? Trading is exactly the same. Most of you watching this probably already know how to trade. You have a strategy. The intellectual part is done. The problem is when the chart starts moving against you and your lizard brain starts screaming at you to abort the plan. Intelligence won't save you in that moment. Only discipline will. We talk about discipline a lot, but it's kind of an abstract word. What does it actually look like in practice? It's boring, that's the truth. Successful trading is incredibly boring. It means having a set of rules and following them every single time, even when it hurts your feelings. Especially when it hurts your feelings. It's the ability to take a loss when your system says, get out, instead of praying for a turnaround. It's the ability to sit on your hands and do absolutely nothing for 3 days because the market isn't giving you your specific setup. You don't need to be a genius to follow a set of rules. You just need to be stubborn enough to stick to them when your emotions are trying to hijack the steering wheel. So if you've been sitting on the sidelines feeling like you aren't math enough for this game, I hope this relieves some pressure. You don't need to be Isaac Newton. You just need a simple plan and the grit to stick to it when things get uncomfortable. Stop trying to be the smartest person in the room. Just try to be the most consistent. If this video helped shift your perspective a little bit, do me a favor and hit that like button. It really helps the algorithm find other people who are struggling with the same doubts. And if you want more videos on the psychology and science side of trading, the stuff going on in your head, not what's on the charts, make sure you subscribe. Keep it simple. Stay disciplined. I'll see you in the next one.